All right. Welcome to our webinar today. Today's webinar is titled Simplifying Complexity in B2B E-commerce, Overcoming Payments and Tax Challenges. And joining me today will be some experts from Zamp, BlueSnap, and Cronix. I'll introduce them momentarily. So with me today, first up is Brian Knowles. He's a sales executive at BlueSnap, where he works with mid-market and enterprise merchants to solve B2B payment complexities, from checkout optimization to ERP-connected AR automation. He's got 6 years of experience in payments industry and is here today to talk through what it takes to get B2B payments right utilizing your commerce platform, in this case, Shopware. In addition, we have Matt joining us, and he has 15 years of experience in sales tax, including his current role where he is heading up revenue for Zamp. But he also helped build out Avalara's e-commerce practice for 6 years and ran sales at TaxJar, which was acquired by Stripe. So in other words, invest in Matt. That turns out to be a pretty good investment. Amandeep is the founder of Cronix, who's an agency who specializes in complex commerce, is a longtime Shopware partner, and is an expert in all things B2B. So welcome, folks.
Thank you, Jason.
Thanks, Jason.
Yep. And I'm Jason Nyes. Okay, so today we're going to talk a little bit about the challenge. And this is an overly simplistic view of B2B e-commerce and some of the players that are components of a e-commerce stack. And so at the top, we've put Cronix. Cronix is a system integrator agency who's responsible for delivering world-class end-to-end experience for your sales reps and your portals and the like. And included is Payrock, who is a payment-centric BlueSnap, which is a payment-centric company. You have Zamp, who's the tax engine and provider, and they're going to talk about some of the things that are uniquely B2B and how the integrations between all of these systems tie it all together, as well as Shopware, who is a market-leading e-commerce platform dedicated to solving the needs of the complex merchants in the market. Next slide. Okay, so let's hand it over to Amandeep. Why don't you give us an intro to Cronix and start leading the discussion?
Yeah, Cronix is a web design development company, and I personally also did a Shopware solutions architect certification, and we also have a number of developers who are Shopware certified as well. And we got an opportunity to work on a few Shopware projects, so that's great to be working with the Shopware team on this webinar as well. Yeah, I think in general, if I talk about the B2B complex B2B case studies or some of the pain points which I have recently worked on, and the number of challenges that we have faced with some of the clients that have faced. Considering the Shopware allows us to customize the checkout and integrate the custom payment solution, I think that's was pretty helpful. Like recently, we worked on a project where we had the ACH payments, and then we also had credits, where you can define the credit limits per different company level credit limit, and then we also had invoice payments. So I think these are the use cases that we are coming across pretty frequently, like where especially with the B2B, where they want to fetch the invoices, where the customers want to fetch the invoices directly from the ERP, and then they want to capture the payment within their e-commerce system. So that they don't want to have some kind of different channel. So they want to have an e-commerce system where they can actually make the payments for the invoices, which could be one invoice can have a partial payment, like multiple payments to the same invoice. So we were able to do that with the ACH as well as the credit card payments. And the beauty which I like about the Shopware is that you are not like a closed, it's not a closed system when it comes to the payment system. You can integrate with the like say if your ERP support a specific payment service, and then you want to have the same service on the e-commerce channel as well, you can do that pretty much because you have the full access to the code and everything as well. So that was some of the major thing which you're coming across: the invoice payments directly from the ERP system, the credit system and ACH, So yeah, that's pretty good with the payment side of the thing in terms of, I know we have the panel here who will also talk about the taxes as well. So, when it comes to the internationalization and also the accuracy of the taxes and also the integration of the tax system within the ERP and the e-commerce. So yeah, that's pretty interesting use case that sometimes we come across that the it should be same, no matter it's a ERP or it's a e-commerce. So yeah, I would love to hear the opinion and some of the use cases the other team, I think BlueSnap yeah, they're working on.
Fantastic. All right, let's move to the next. So, one of the things about B2B e-commerce in B2C, it's about inspiring a purchase. And largely there is no such thing as a right or a wrong thing to buy. But in B2B, it's almost always required that there is a product that is the right fit that they should buy. They should buy this size, not this other one, because it's wrong. And so in order to deliver world-class B2B, obviously the integration into systems like payments and fraud and tax have to be flawless. And the integration between these systems have to work very seamlessly. This is a little bit of a view as to how Shopware thinks about B2B, which is very, very different than this kind of classic standard B2C use case. You can see things like agentic commerce. You can see things with how you deal with credit decisioning around who has the ability to pay a certain way. But B2B is far more than just commerce. It's about automating business processes around B2B. So a little bit of a Shopware view, but you can very clearly see that both payments and tax are very clearly got to be part of perfect computing and integration between these two systems. So that's kind of a setup to transition into the next slide, which will introduce one of our partners, BlueSnap. Can you talk a little bit about BlueSnap's role in enabling B2B e-commerce, Brian?
Yeah, definitely. Thank you. Thank you. Yeah, taking a couple minutes diving into the payment side, introducing BlueSnap. We really focus on this B2B payment space. And like Jason mentioned, right, it's not like the B2C space where you're inspiring that purchase. It's more about providing the workflows both for the customer to make their purchase easily in the payment method that they want, as well as, finding that right part, those pieces that Shopware excels at. Right, so on the payment side, what we're focused on is making that purchase as easy as possible for the B2B customer and doing it in a B2B compliant manner, right? You see this all the time in the market when it comes to these fantastic Shopware setups and other e-commerce platforms. There's so much investment in making sure that all of those workflows are perfectly suited for your B2B customers, and then jamming a B2C processor at the end of that sequence just creates inefficiencies, it creates additional cost, it creates lower authorization rates, and it ends up pushing your B2B customers into making payments in maybe a payment method that they're not wanting to do necessarily. So it creates some unnecessary burdens within that workflow. We'll dive through plenty of these kinds of use cases as we go. If we jump to the next slide, built for how B2B actually pays. A few things that we'll definitely want to talk about in terms of thinking about where the B2B buyer sits today. Number one, these B2B buyers are more and more sophisticated every single year, right? They understand that when they're making purchases with their corporate card, it's costing interchange, and they see surcharging rising much more through that checkout process in the B2B space. So surcharging really growing quickly in terms of use cases and things that companies need to be thinking about on the B2B side, because it's a huge margin uplift. And then number two, I mean, L2, L3 data. There's a lot of companies that are familiar with this right now, sometimes for positive, sometimes negative reasons, right? There might be folks in the audience today that are seeing those L2 surcharges hitting their processing statements. They're not quite sure what's going on with them. L2, L3 is critical in the B2B space. These are direct hard cost reductions that are built into Visa, to MasterCard, and you need to have a B2B processor to take advantage of them. So absolutely critical. There's no reason to be paying those B2C rates on your processing. So a
Go a
little
level
bit.
deeper for me, Brian. On L2 and L3, what exactly is the L2 and L3 data? Like, what exactly is it?
Yeah, it's a great question. So L2 and L3, essentially what you're doing is you're telling Visa or MasterCard, hey, these transactions are not B2C. These are B2B transactions, and therefore they're lower risk, and therefore they should be processed at lower rates. And now in order to prove, if you will, that each transaction is a B2B transaction, you need to have data from Shopware, from your ERP being included on that transaction itself to show, hey, this was a specific order, specific invoice, tax lot, SKU information, all those data pieces. There's about a dozen or two that need to be included, right? And that level of data integration, that's why you need a B2B processor to be able to capture these interchange discounts. If you're using your standard out-of-the-box processor that plugs into, let's say, a Shopware, your ERP, whoever it may be, it's unlikely they're going to have that deep level of data integration to automatically pull that lot information, SKU information, all of those details that you need to effectively prove to the card networks that it is a B2B transaction and get those interchange discounts.
So if you were doing a standard rate, it's probably what? Call it 2.5, 2.75% of GMV.
Yeah,
How
let's call
much
it that.
does L2 savings get you, and how much does L3 savings get you?
Yeah, it's a great question. So these discounts range. The interesting aspect is it ranges per transaction, right? So we're qualifying every single transaction, driving savings from, say, about 80 to 90 basis points. That's 0.8 to 0.9%. Down to some of the lower ones, it's 0.1%, 0.2 in terms of savings per transaction that you get. So what you see in the BlueSnap reporting is, hey, per month, this is my average discount that I'm getting as I'm processing with BlueSnap. And that's directly flowing to your margin. If you get L2, L3 data, that's, let's say, 0.5% of profit that flows right to you.
Perfect. That was the reason why people should care. So if they're not having a conversation with their current payment processor around L2 or L3 data, it's a big red flag. There's a 0.5 point to a full point of margin that could come back to the processor, or
That's correct.
to the merchant. Okay, keep
To the
going.
merchant. To the merchant.
Yep.
Correct. Correct. So all of these pieces, right, in the B2B space, it's all about just how do we make sure that we're not losing margin to effectively to card networks and these other platforms. Surcharging is another piece of that, right? Add in a 2.5% surcharge to cover most of your card processing costs. That's another uplift in margin, and the B2B community is realizing this really quickly. Like Amandeep had just noted there, it's a big ask, very, very common. And then the most commonly overlooked piece, aside from just surcharging and L2, L3 data, is this idea of global orchestration and payment orchestration. And when we think about today's global businesses, you want to be selling your products to global customers. You don't want to have any kind of limitations in regions that you distribute to, but you also need to make sure that those transactions are actually processing at the same rates and rates of authorization that you would expect, right? If you start selling to customers in Germany, but suddenly you're only capturing 80% of the transactions, right? 20% are failing. That's another huge hit to margins that you could easily capture by using a B2B global payment processor.
Fantastic. So now, obviously, I think you did a really good job of highlighting some ways to turn payments from a cost center into a revenue driver, and a margin kind of clawback machine.
Absolutely.
Let's transition to Matt to talk a little bit about Zamp, who they are, and kind of share some of those examples as well. So Matt, floor is yours.
Yeah, great. Thanks, Jason. Yeah, Zamp is basically a managed solution for sales tax, right? We own the outcome and we support all of the requirements of tax around sales tax, around filing, reporting, registrations, handling notices. It's a full service that we offer. And what's interesting, what Jason talked about was the process or flow in my quote to cash in B2B to make it a flawless experience, right? And you get to the end point, which tax is always at the end point. And, that's the component of getting it accurately, and why that really starts to matter. And we look across, Zamp has a B2C business. We also have a large B2B business within our client, with our customer base. The ACV, the size of the transactions are significantly higher, right, on B2B. So that's where the importance of accuracy just becomes really critical in terms of that buyer experience. It can be the make or break in terms of ensuring that you get repeat buying, you customer retention, the right experience, ensuring that when they get to that endpoint and the tax is applied or the exemption is applied, it's accurate. And I'm going to key on a couple things here. There are a couple things here like mixed resale line items and state sourcing rules where there's you can have multiple ship to addresses on a single invoice. That gets really interesting, kind of an edge case, but it happens a lot in B2B. You can see it in B2B. Mixed resale. Hey, I have a buyer that uses some of the product. It's taxable for internal use, and some of it they're going to resell, which is exempt because they have a resale certificate they provided me. So those are things that we're going to see, these common, these edge cases and use cases that have complexity tied to them. But I want to key on a couple of things really for accuracy here. One is economic nexus. So economic nexus was approved by the Supreme Court as a legal law in 2018, which was the Supreme Court, Wayfair versus South Dakota. They ruled in favor of the state, and basically they gave states the right to bind companies to collect based on how much they sell. Well, this impacted a lot of different areas, and B2P was significantly impacted because, again, you're doing high volumes. Before, you were just charging where you had a physical presence. You had inventory in a state, employees, offices. Maybe you were, traveling to a state to do maintenance on specific products. All of those were physical triggers. But when they implemented economic nexus, now they could bind you based on order and or revenue volume. And everyone's very aware of it now. Well, most companies are. And the key thing also, though, is what role, if you're multi-channel, these orders play in economic nexus. Because a lot of companies will say, well, I only look at my direct taxable orders on economic nexus, and some platforms only support that. But the reality is wholesale and marketplace orders also have impact on economic nexus. And keying in on wholesale, there are 10 states that count wholesale in their definition of economic nexus. 4 states count marketplace, 21 states count both, right? So this is something we come across a lot of B2B companies out there, and they're like, I didn't know, I wasn't aware of this. This is really important because you could be triggering a requirement in a state based on your B2B business. Specifically, it could be wholesale resale, for example, that you're not aware of. So, and again, you may have a big direct business as well, which is incurring liability, uncollected sales tax based on this trigger, based on triggering this state threshold, which again could be tied to revenue or orders. So really important that you get an assessment if you're multi-channel, and you have a big B2B practice, and then you're tracking that accurately as you go. The other really important area is product taxability. There are lots of different categories in the US that are taxed differently, depending on the product type, whether it's a service, a tangible product, digital, clothing and apparel, food and beverage, and so on. There's a lot of codes, requirements around how that is taxed in different states. There can be exemptions, there can be partial exemptions, there can be exemptions based on the cost of the product, the price per unit. So really important you understand that. And then also, again, on the service side. And when you get into, specific areas like digital gets really interesting. There's a lot of gray area on digital, and that's an important area. But you want to make sure that when you're selling, you know all of your SKUs, and you're mapping the correct tax code, meaning that tax code has all the logic that will ensure no matter where that product is shipped to, the appropriate exemption or tax rate will be applied at a line item level in the order. You can, again, run into some significant inaccuracy issues with not mapping tax codes correctly. Again, we see this from time to time. It has become a big risk area. It's something that you need to maintain and manage. The final thing is on exemption certificates. You think about, one is my first time buyer coming to my site, they want to purchase, they're exempt. And you know, today they probably call you and say, hey, I'm exempt. Where do I send my certificate? Or you're maybe able to capture that real time in your process, validate it, and allow them to buy online, right, immediately as an exempt buyer. That's the ideal scenario, right? But there is scenarios where we hear a lot from B2B sellers. Well, you know, I had to tax them on the first purchase, then I had to back up the order, credit it back, do another order, refund them the sales tax, and so on. So it created the wrong experience as that first time buyer. Specifically for certificates, though, the important thing as well is that you're validating certificates for these buyers, and you're storing them. And by storing them, you're providing an audit trail, because one thing state auditors, when they come in to audit you for sales tax, one of the first things they will look at is, where are your exempt purchases? Show me the certificates of those buyers. And you have to make sure that you have not only the current up-to-date certificate for transactions that are occurring in current time, but they will look back, you know, anywhere from 3, 5, sometimes up to 7 years that you had the certificates historically for those periods as well. Some states you can rely on one cert that's good forever. Other states you have to update the certs every year, every other year. There's different rules tied to the different type of certificate. So these are things that are just important in terms of ensuring that you have a really accurate experience. One, you're collecting where you should be. Two, whatever product or service you're selling, you're applying the appropriate tax code. Is it fully taxed as TPP or tangible personal property, or is there an exemption rule applied to that, you know, that the tax code will support? And finally, the certificates for my exempt buyers, my wholesale resale buyers, which is one of the biggest categories in the U.S., that you have that buttoned up, because that's the piece. Again, you're gonna protect yourself longer term with that.
Fascinating. All right. Well, before we move on to the discussion, in fact, maybe this is kind of start of it. When you think about where the best place, and maybe this is to Amandeep, where's the best place to integrate the tax and the fraud? Is it into the ERP first, and then the e-com platform uses it, or is it into the e-com platform, or is it both? What have you seen, Amandeep?
Yeah, with the B2B, I mean, some of the B2B customers, merchants that we came across, so what happens that usually they are using very old, B2B ERP systems, and they try to bring the same kind of a tech stack on the e-commerce channel as well. So some B2B merchants have like very advanced, good tech stack already. They also have their own promotion pricing engine as well. So I think it varies customer to customer, but what I have seen is like if it is legacy B2B ones, so they are very tied into the ERP system, and then you want to have and then they want to use the same kind of system like a tax or payment or system like that on the e-commerce side of things as well. So you do want to have a bit more flexible system. But yeah, I think those are like a small to medium-sized businesses. If they're like more enterprise, like we're talking about like $150 million or more businesses, they definitely have like an online tech stack kind of thing. So they have a stability. They probably will be migrating to a better e-commerce system kind of thing for performance reasons or from other different roadmap reasons.
Got it. Brian, question to you then is around the ideal customer to utilize surcharging. Is this a kind of wholesale use case where people are trying to make 50 basis points more margin, or is this more for the distributor who's already trading on razor thin margins, and those 50 basis points makes a huge difference. Can you kind of talk about who the ideal customer for the surcharging is?
Yeah, definitely, definitely. And the one of the great things about when you utilize a all-in-one account structure processor like BlueSnap is it enables the surcharging function itself to be fairly flexible, right? So if we think about, the classic business that is running into margin compression, they're looking for ways that they can save money on the distribution side. A lot of firms, if they're not aware of being able to turn on surcharging within their processing service instead of adding on a different tool, they might consider, raising their prices 1 to 2% instead of adding a new tool into their tech stack that they're not sure how it will, integrate, how that process is going to go taking on that technical risk. So that's one of the ways that BlueSnap has grown so quickly in terms of bringing surcharging to market is enabling our customers to not have to go out and find a separate tool, and simply, instead of going through that process of raising prices 1 to 3% to cover their expanding card network costs, just simply turning on the surcharging function makes a world of difference. I can imagine, from Amandeep's perspective as well, working on these projects, instead of having to loop in a whole nother technical team, another support team, another integration piece, just flipping it on as one feature enables it to be something that's not something that has to be backdoored or back-ended in, but something that can simply be flipped on.
Well, let's pull on that string a little bit. So I think there's in B2B, one of the biggest drivers of kind of digital adoption, which means kind of proliferation of e-commerce and automation into the sales process, one of the biggest drivers or blockers is the cost of payments. And if you think about 3% of gross sales, and then you apply that for payment processing, and then you apply that to, say, a distributor who only makes between 5 and 7 total points of margin, more than half of their margin goes out the door just by taking payments. Okay.
Yeah.
So one of the biggest drivers of B2B being able to embrace digital payments is what you talked about. It's the concept of surcharging, which takes away that margin. It's the L2 and L3 data, which cuts the cost in half.
Yes.
And so between those two things, we've now eliminated one of the biggest things that's prevented B2B from really going digital. Amandeep, do you see that use case in your B2B prospects and clients?
Yeah, no, definitely, for sure. I know we had talked about a particular client in the past where we are pursuing together. So they were distributed, by the way. So they were wanting to, just go with the surcharging, and we had to go with the checkout fee as additional thing. So I think it does play a lot of, what do you call it? So it does add a bit of a revenue for them, kind of thing, which they don't want to show as a different line item, which kind of turn off for some of the customers over there. So it does act as a big, even if a small percentage, because the payments are bigger, the orders are bigger in B2B. So definitely is a huge revenue boost as well.
Yep. Now let's talk about the other things that have prevented digital commerce from being adopted inside of B2B sales organizations, and it's the kind of channel conflict that was created in the early 2000s. There's a lot of manual processes inside of these distributors and wholesale merchants that haven't done a good job of making their way onto the web, and the sales reps really like to keep those customers for themselves. It's like 97% of all B2B transactions happen with the rep as opposed to kind of online digital. From your perspective, Matt, what role should digital play to kind of automating some of those tax use cases, like the example around certifications and dealing with refunds? But how do you integrate in tax so well that it becomes the easy button for the sales reps to use? Does that question make sense?
Yeah, it does. I mean, when you think about this scenario, right? So essentially, you're looking at a seller who has multiple channels, and I think this goes back to what was talked about earlier, which is the consistency across the systems. So if I am going to be taking phone orders or manually inputting orders into, for example, an ERP system, that importance of having, for example, like a Shopware integration, that's with the same provider on the tax side, with your backend ERP system. There's significant value to that in terms of supporting, quote to cash, the accuracy across not only the initial order, any returns or partial return scenarios. So it's one version of the truth across all of the channels you sell on. I think about there is obviously some friction around certain buyers wanting to buy online. They prefer kind of an older school method, and I think there is a pathway for some of them, to ensure that, hey, when I go on there, I'm going to get the accurate amount, which includes the tax calculation, because I have all my specific rules in terms of what I can purchase, the prices I can purchase them at, et cetera. And then the tax, I want to feel like when I get to that point, the accuracy of that calculation is that same accuracy I'm going to get if I call in an order or do an EDI or whatever method I'm going to do, within the backend system. So really important, I think, the consistency and then the confidence level that it's going to be calculated accurately.
Fantastic. Yeah, and so the theme of today is how do we enable B2B to be to enable payments to eliminate the barrier of driving B2B adoption, and then how do we make tax kind of pre-integrated, pre-wired, pre-considered, so that the sales reps don't have to think about that use case where they have this refund for tax exempt and you get audited and it becomes this big nightmare. And so what we're really doing through really a thoughtful B2B sales process is eliminating the reasons why not use digital. So I think let's go to the next slide. I just want to thank our partners at BlueSnap. Brian, thank you. Our partners at Zamp. Matt, thank you. And I'm Deep from Cronix. I thought that was a really robust 30 minutes. So thank you thank you to the audience for sticking with us. And we appreciate it.
Thank you.
Thanks, Jason.
Well, thank you, Jason.